we're going to see a return to ZERP and a return to QE. We got to print money. And that's like nectar to gold bulls. I mean, it's just, the gold's going to go to 5,000. And when that happens, these stocks are going to explode.
So, and then the last sort of general question before we get into your portfolio.
Sure.
I always think it's important to share a disclaimer with folks, viewers who are building their own portfolios, that picking one or two gold stocks is a very bad idea.
Oh, terrible idea.
So what do you think? 5 to 10 minimum?
Minimum of 10. And I'll just give you an example. Now, some of these are only 25 basis point positions in my fund, but some of the drill stories I own, I literally own 25 or 50 basis points. That's a 0.5%. Mm-hmm. You might say, why even bother? Well, the reason to bother is that if I'm right, some of those can go up 10x. And so a 0.5% becomes 5%, or go up 20x. It becomes, 10%. On the other hand, the company can fail. And so I lose a 0.5%. So, if you look at my total portfolio, I've got over 100 names. Mm-hmm. But if you look at the drill story and the producer side, so there are the three buckets. There are producers, developers, and drill stories. I'm probably 65% producers and mostly growing producers. I'm probably, call it 20% developers, and then the balance was at 15. I think it leaves is our drill stories. Mm-hmm. So as I said, and this is accounting for the risk we talked about earlier. A producer that's making money, there's less risk. And by the way, they can do just fine, especially as the multiples expand. I mean, some of these are still quite cheap. So yeah, I think people should lean toward the producers. And then, if they want to take a flyer on a drill story or a developer, that's fine. But they should recognize that they're taking a bit of a flyer, that it's got more volatility to it. And, I'm going to give some names, but I should also caution, I buy and sell these things all the time. There are some names I would have given you 2 months ago that are now up 150% from where they were 2 months ago. And frankly, I've sold them down quite a bit because they got ahead of themselves. So, I think it's important to, whatever you're looking at, to understand when the thing you're looking at is cheap and when it's expensive. And I'll give you the metrics. In the drill story area,
that was going to be my next question. Yeah. What is your favorite metric? Like when you say to your wife, these gold stocks are so cheap, book to cash flow, price.
Yeah, I just look at,
what's your favorite metric?
I look at enterprise value to EBITDA.
Okay.
More than anything else.
And what historically has it been, and where are we now?
Well, it's, in 2011, it was as high as 20. Mm-hmm. I think a good long-term average is 8 to 10. Mm-hmm. I think some of the better companies in my portfolio are trading at 2 or 3, depending on whether you're looking at, that's probably 1 year out. If you're looking at trailing, maybe they're trading at 4 or 5. Mm-hmm. So I think that, what that implies is these companies could actually double in value without earning any more money. Just, as these stocks get recognized, as the Mag 7 becomes less attractive, and gold stocks, which are up for the year, I'm up 30% this year roughly. Mm-hmm. And the Mag 7's down, I don't know, a similar amount, but some amount. And, as this whole category becomes more attractive, people are going to be willing to pay more per dollar of cash flow. So that's probably the best metric. There's different metrics for different areas though too, Trey. I will say, like in the drill story area, I look at market cap to how many ounces I think they have. So an ounce in the ground, every ounce in the ground is theoretically worth $3,100 once you pull it out. Well, I've got some companies that are trading at $9 per ounce in the ground. Wow. Now, it's going to cost money to get it out, but it's not going to cost $2,900 to get it out. So, or $3,000 to get it out, right? So
you mentioned different sectors of the industry. Yeah. Where do you stand on like your average market cap and your
Yeah, that's a great one too. Yeah,
just to give people an idea, how big are these companies?
Well, the sweet spot, in my opinion, is when they've kind of gotten to 100 million or above, because below that, the financings are tough. They don't have enough following. The institutions can't buy it, et cetera. Maybe the sweetest spot is more like 500 to $1 billion, because you can still from 500, to go from 500 to $2.5 billion, you can do that.
Hmm.
When you're Barrick or something, you got a $40 billion market cap. You're not going to go to a $200 billion market. It's not going to happen. So,
Right.
right.
Hmm. Hmm.
Um, but some of the biggest multiples are below 500. Some of them. I mean, I've got a lot of companies that are 100 million.
Hmm.
Now they've got financing risk because at that size, few people pay attention. But if they're fully financed and they're generating cash flow, well, then that's a nice place to be. I mean, I'll give you my favorite silver producer right now, and it's up 100% from the end of last year. So you're not getting it as cheap as I bought it, but Vino Silver, has got a $270 million market cap, and these guys are going to grow production. The silver price is going to go higher. Their margins are going to grow. I mean, I was calculating it yesterday, just playing around with the numbers. I mean, if we go to $50 silver in 4 or 5 years, which I think is very doable, and they achieve their production growth targets, they're going to earn their market cap, and then it should trade at 10 times their market cap. So, right. I mean, so this is a potential 10 bagger if silver goes where I think it goes, and if they grow the way I think they can grow. So, that's and that's what you get when you start. I mean, I bought it more like 100 million and it's at 270 now, but that's what you get when you start lower, right?
Hmm. You brought up silver, so
Yeah.
what what's your exposure to silver and
Yeah,
platinum and
well, as you
copper?
know, there are very few pure play silver companies. I mean, all these companies have silver and gold. I mean, Pan American used to be all silver. Now it's probably almost 50-50 silver gold. But there are some pure play silver companies. I own all of them. And I love them. As we all know, silver is a smaller market than gold. It's a more volatile market than gold, and it's a two-tier market. It's not just a monetary metal. In fact, it's really less of a monetary metal than gold because central banks don't really hold silver. But it also has all these uses that mean there's not much stock laying around, because it gets used in solar panels and electrical chips and so forth. And so, when things get tight in the silver market, as you know, it goes up faster than gold.
Right.
And so if we're going to have a bull market in silver and gold, which I believe we're in and are going to have, silver's going to go up faster. I mean, silver's at 30 now. I mean, silver could double to 60, in my opinion, in the next year and a half, 2 years. I'm not sure gold's going to go from 3,000 to 6,000 in the next year and a half to 2 years. I mean, it could go to 4,500. And the silver miners are more levered because they have actually there's more margin in the gold miners. And the silver miners, the ASICs and the silver miners are running in the 20s, mid to high 20s, and silver prices until recently in the low 30s. They weren't making much money.
Hmm.
And so when suddenly if silver goes to 35 or 40, the percentage gain in their profits is going to be much larger than the percentage gain in gold company profits as gold goes higher. So there's
And
more
for our
torque,
viewers, ASIC means average
average sustaining,
sustaining costs.
all in sustaining costs, right? The cost to mine and then reproduce the ounces that you mine.
Hmm.
So silver, and to my portfolio, I probably have a 30% kind of pure silver weighting. I mean, there are really probably only 10 or 15 names that can kind of say they're more or less all silver companies.
Hmm.
Most other miners have a mixture of silver and gold.
Hmm.
So,
And where do you stand on platinum and copper?
yeah, so I think they're both going higher. I'm just not smart enough to know how, particularly copper, which is somewhat driven by economic growth. And I think we could have a tough economy here. So
Hmm.
Barrick is pivoting towards copper, and that's fine. I'm not a copper guy. I'm sure platinum's going up in value. I know it's limited in supply. I have one small drill story that I own that's silly cheap. I've been buying it recently called Clean Air Metals.
Hmm.
It's a great platinum palladium deposit in Ontario. But in general, that's not the area that I'm in. And same with uranium. I mean, there's so many other minerals. I've really tried to stick to what I consider the two pure monetary metals, or almost pure, gold and
Hmm.
silver.
Is
So
it because of the monetary component or
it
just
is.
because you only want to do a small number of things?
Well, I guess it's probably a little bit of both. I mean, you can
Right.
only do so much, right? I mean,
Right.
to learn the copper business, I mean, or the uranium business, I mean, I just don't have the bandwidth to do it. It's hard enough for me. As you know, there are about 500 of these stocks, and I sort through them all the time. And it's hard to keep on top of them and
Right.
know which the best names are. So that's a full time job.
And 40 years ago, all the gold in the world was found in South Africa, Mexico,
Yeah,
Canada, and the
yeah,
US. And now it's, found in Tanzania and the Kyrgyz Republic and all this type of stuff.
yeah.
how do you look at the geographic hurdle? Are you
Yeah, it's a
willing to
great
go
question.
anywhere?
It's a great question, and I like Rick Rule's view that all geographies are dangerous, including Canada and the United States,
Right.
just because there are
In
governments
terms
involved.
of
But
expropriation from taxes and that type of thing,
yeah,
right?
exactly. And as we all know, as these mines become more profitable, the governments become more greedy.
Hmm.
Yes, there are some areas that I will not go into. There are areas that I'm very leery of. But in general, there are also opportunities in some of these less developed areas. I mean, I know there are people who say, well, I'm only going to buy gold stocks in Canada, the US, and Australia, and that's fine. But you pay a higher price for doing that. And as I say, I'm not sure that geopolitical risk is not necessarily as low as people think. Africa, actually, in my view, has been unfairly painted as a dangerous place. I've made a lot of money investing in Africa, and as it turns out, Africa's got an enormous gold endowment all the way up
Hmm.
from the Witwatersrand all the way north. That whole western side of the country, and many of those countries are fairly stable, like Cote d'Ivoire and so forth. So Ghana. I mean, there's a really a couple of good companies I'll mention when we get to the company list there.
Yeah.
So
So I think one of the things people miss is in a lot of these countries like the Congo and all the way down,
yeah.
they really need these mineral resources developed. And, they're actually more focused on developing the resources and they can't take them away because they can't operate them themselves, right?
That's exactly right. They can't, but they can try. They can try and increase, their revenues, and they hold you up at times. I mean, to the miners' credit, the miners are all kind of pretty well united at the management team level of saying to the governments, "Hey, government, you mess with this, and we're out of here, and there's no way you can produce this gold." And so
Hmm.
the government smartly then says, "Okay, I'll settle for my 3% NSR, or for my 30% in taxes, or for whatever it is I get." Because that's real money to me that I need to help my people. So, yeah, but that's not to say, there haven't been problems. I mean, there are problems, there are issues, there is some unrest in certain parts of Africa. I mean,
Hmm.
one has to be somewhat careful. I actually thought there were, I mean, more recently, some of the South American things have kind of gone more in the wrong direction. Peru, well,
Hmm.
Argentina was really a problem when they had capital controls, but Malaya is kind of unwinding that, which is a positive. Um, you know, the um, the Peru stuff is not great, to be honest with you. There have been some ups and downs in Mexico. It now appears that we'll be okay there, but it's always a risk everywhere. Ecuador for quite some time was a problem. Venezuela has always been a problem. Wouldn't touch anything there. But it's really kind of case by case.
So my last general question is, how do
Yeah,
we know that the gold stock lag isn't foreshadowing a gold price decline?
we really
And
don't. We
what's
really
going to
don't. I mean,
be
that's
what's
that's
going to be
that's
the catalyst to close the gap?
Yeah, that's a great question, Trey, and I wish I knew the answer. I don't entirely, but
Hmm.
I think this is typical wall of worry kind of stuff.
Hmm.
I think until as recently as 6 months ago, I always look at the analysts, the Toronto analyst estimates of future gold prices. And 6 months ago,
Hmm.
the gold price was at 2,500, and to a bank or to an analyst, they all had the 1 year out estimate of being 2,100,
Hmm.
or 2,000. So we were at 26 and we were going down. Well,
Hmm.
guess what? That didn't unfold. We went from 26 up to 31. And my guess is now they're saying, okay, well, maybe 25 is sustainable. But I mean, arguably, it's ironic. But when we're at 35 or 4 and they're all saying it's going to 10, well, then I'm going to get nervous,
Hmm. Hmm.
right? Because, and by the way, when we transition from here to there, people are going to do the math that you and I were just speaking about with respect to these gold stocks. And they're going to go, oh my God,
Right.
you mean to tell me I'm buying 3 times cash flow at 2,600 and the gold price is going to 4,000 and I'm paying 1 times cash flow at 4,000? Well,
Mhm.
I need to own this stock. It's going up. And
Yeah.
so I think that's in our future. What's going to catalyze it? I think the biggest catalyst, and I talked about this in the book, will just be kind of the recognition, the wider spread recognition of what you and I believe and know is kind of the sovereign debt issue. And I think gold's sniffing it out. That's why I mean, gold should not be doing what it's doing. I'm surprised. I'm surprised the
Mhm.
gold price at 31. There hadn't been
Mhm.
anything really that's happened, and yet
Right.
it's just quietly marched from 2070 last March. I mean, 1 year later, we're at 3,100. That's a damn good gain.
Right.
And so my sense is it's sniffing out what's coming. And when that coming thing, what I think that coming thing is, that's the title of the book, the big print. The government has to print money to keep the system going.
Mhm.
And when that happens, I think it'll be very similar to what happened in the COVID example, where, gold very quickly went up 30%, another 30, 40%.
Right.
And the gold stocks exploded. I mean, in those 2 years, in 99, my fund went up 97%. In 2000 went up
Mhm.
122%.
Mhm.
But full disclosure, it's been down since then. I mean, until
Mhm.
recently. The next couple of years when Powell started tightening, I got hammered.
Right.
So it's a very volatile industry. But I think what's going to happen is I think the sovereign debt issues are going to become ever present and larger, and they're going to burst onto the front of the page of the newspaper, and we're going to see a return to ZERP and a return to QE, and a realization that in spite of the problem that we have with inflation, which is it's really in the threes, not the twos, they're
Mhm.
going to say we got to ignore that because we got to keep the system going, and therefore we got to print money. And that's like nectar to gold bulls. I mean, it's just the gold's going to go to 5,000,
Right.
and when that happens, these stocks are going to explode. I
Right.
mean, I fully expect some more 100% up years, but it hasn't happened yet, and I'm not sure when that's going to happen. I
Mhm.
put that as likely to happen in the next 2 years, but no guarantee, right? Just a guess.
So, with the usual disclaimer that we are
Yeah,
obviously in no way soliciting
no, no, no.
purchases of individual companies, can you give
Yeah,
our
I'll
viewers
give you a
few
big long list.
ideas
There's a
to,
lot
to,
of free
to
work. I own
sharpen
all
their
of these.
pencils on?
Yeah, I own all these. Everyone can make their own decisions. So let's go through kind of the emerging producer or the producer
Mhm.
area. And some are emerging, some are pretty big. Start at the big ones. I like AEM. I like Calibre. I like
Mhm.
Avino Silver. I mentioned that. I like Dundee a lot. I like Adriatic. It's a silver miner that's kind of emerging over in the Baltics. I like Eris. Very misunderstood. It's in Colombia. Very cheap. I like B2. I think the Goose Project is going to come. It's going to work. I like
B2's
Aya.
been a laggard, right,
It
lately?
has. It has been a laggard. You can still buy it cheap,
Mhm.
but I think it's going to work. And people are a little bit worried about their mine in
Philippines or
no,
Mali?
Philippines is good, the Mali mine, but I'm not
Uh-huh.
too worried about it. I know a lot of people from over there, and I've looked a lot at all the security. I mean, basically they have extremely high security. The smart guys in Africa know how to handle it.
Mhm.
Aya is an amazing silver company with a great deposit. It's still kind of emerging. I like the Standard Core, Hecla, Pan American, all silver names.
Mhm.
Galliano is a producer over in Africa that's misunderstood. People
Mhm.
put an Africa discount on it. Orezone, same story. Orezone
Mhm.
is silly cheap. Go run the cash flows on Orezone. It's
Mhm.
unbelievable. There's
Mhm.
amazing cash flow, and it's growing, and
Mhm.
the stock is cheap.
Mhm.
Hochschild's a good company, good name, undervalued silver producer. Endeavor Silver is good. Heliostar is a really nice development growth story. I own G Mining, got too expensive. I'm lightening up, just sold it. K92 is a great long term story. Kinross is a good major. Alamos is a good major. It's not cheap. Torex is a very nice major. Still relatively cheap. In the development area, some of these are really small names. A couple of them I'm on the board of. Getchell Gold is a great story in Nevada. Westvault is another great story out west. Cabral, I'm on the board of it, so I'm just full disclosure there, but it's a great drill development story in Brazil. Discovery Silver, I think, is an amazing story. Very well run. Tony Makuch, I have a lot of respect for him. They just bought an operating mine. They're developing a huge silver mine. Gold Shore is a nice development story. Maritime is coming along. Montage is coming along. Next Gold is coming along. U.S. Gold is another good development story. Silver Tiger is a great development story. Skeena, good development story. And then on the drill story side, I love Banyan. I love Lavras. I'm on the board of Lavras. It's down in South America, so
Mhm.
full
Mhm.
disclosure there. But I think that's a very, very prospective deposit. I love Collective, but this is another one of these ones. It's up almost 100%. In the last 3 months. So I'm not sure I'd add to it here. Free Gold is a great drill story.
Mhm.
So those are just kind of some highlights. I mean, there are other names. I haven't put every name in here, but I put some things I felt, reasonably comfortable people could take a look at and potentially
I
buy.
think that's a great list. It'll keep people busy for at least a couple of
Right.
weeks.
Yeah, exactly. I mean, like I say, do your own work, and I could change my mind on any one of these in a minute
Right,
and be out of there. And I'm not going to call you and tell you. So,
right,
you got to do your own work. But I own all those right now.
great.
Um,
Well, Larry, you were very kind to take this second hour to spend with
uh,
us today.
I
I
always
think
enjoy it, Trey.
we're going to give you 3 months off, so we
Yeah,
won't call you back until
that's a
the
good.
summer.
Well, look, I enjoy it, and then, the next time we'll have to get together up on the Cape when I'm back up there this summer. And
Okay.
I love your letters. People should subscribe to your letter. It's
Mhm.
Trey does a great write up on the gold market, gold stocks, etc., which we subscribe to. I highly recommend that. So yeah,
Excellent.
it's Trey. I got my fingers crossed, man. I feel like our ship is about to come in here.
Mhm.
At least that's what I feel like. I hope I'm right. And
Well, I look forward
next.
to seeing these gold stocks finally reflect this $3,100 gold
I,
price.
I
So,
and I think they will. I think the next
mhm.
year or two is going to be pretty good for us. I really do. So yeah, we've endured a lot of pain, that's for sure.
Excellent. Well, good to
Okay,
speak
thanks,
with
Trey.
you, Larry.
Good to see
Have
you.
a good week. Bye
Yeah, you
bye.
too. Take care.
I'm here today with Brett Rentmeester of Windrock Wealth. And Brett has had the opportunity to review my conversation with Larry Lepard, where we discussed his new book, The Big Print, his views on hard money and portfolio solutions to protect capital if we have some sort of monetary challenge in coming years. So, Brett, thanks for joining us.
Nice to be with you. Thank you.
Terrific. So, we were talking earlier that your views are somewhat similar to Larry's with respect to hard money, the Fed, and the global financial system. On a scale of 1 to 10, how worried are you about where things stand?
Well, the problem with that question is you could have answered a 10 anytime during this last since '08
Mhm.
period, and it's always the devil's in the details of
Right.
timing. So I'd say we're very concerned about where we've been, and really when we founded our firm back in 2012, the premise was trying to be an advisor that was keenly aware of the risk in different way of having to look at a world that's printing money and kind of on a different trajectory. So our worry's always been there. But I think, the debate is this the big one? Are we at some kind of reset event, or is there another way to restructure, give pause, and kick the can? And that's always a hard question to answer.
Right. In 2024, stocks, I think, surprised to the upside. It would be fair to say that second year above 20%, 25.2%. And yet gold outperformed the S&P, even with rising 10-year treasury yields and a fairly strong dollar. There are lots of theories about why gold has been as strong as it has in recent weeks and months. Certainly year to date, I think it's taken a lot of people by surprise. Do you think gold's strength is finally reflecting the concerns that we've both shared for so many years? Are we hitting inflection points and anti-dollar sentiment and anti-Fed sentiment and worries about the U.S. deficit?
Yeah, I mean, I think we're certainly getting there, judged by more mainstream people talking about gold. But the reality is, all the data I see suggests most investors still don't own any gold or precious metals. So I think we're a far way from there being a panic in the world over currencies such that there's a wave of money, into gold and silver. I don't think we've seen that yet. And I
Right.
think, as we both know, one of the issues with gold and silver is it's great to own it when you actually physically have it in a vault or tangibly. But a lot of the so-called gold and silver ownership are in paper contracts, things that you may or may not be able to actually get your hands on the physical metal if you needed it. So I think that's another part to the story that I don't think we've seen, which is there going to be a scramble to get your hands on the physical metal itself? And if so, a lot of the data on gold and silver, as we both know, has paper contracts relative to that 1 ounce of gold. That last data I saw was about 131
Mm-hmm.
times. So I don't think we've seen that part of the story. So if any of those things occurred, I think you'd see much more upside potential in gold and silver well beyond what we've seen to date.
Dating or referring back to our conversation with Larry, Larry is one of the, I think, unique investors who is a total Bitcoin enthusiast, and yet in his fund, which he has run for a couple of decades, Equity Management Associates, he focuses on not only gold miners, but emerging gold miners, and even has a few exploration and development companies in there, some emerging producers. And we all know that is a tough road to hoe in terms of research and volatility and that type of thing. But my question is, at Windrock, how do you guys differentiate between Bitcoin and gold, and what roles do those two assets play in your approach to portfolios?
Yeah, I think for gold and silver, it's always about what is a safe haven investment in a world that's printing money, where we could have an issue with currencies at some point. And for us, gold and silver are the key answer to that, because they're one of the few assets that have no counterparty risk. There are other hard assets, real estate, other things, but most have debt, most have other factors. I think gold and silver are the cleanest way to kind of be out of the system if you want to. I mean, you can own physical gold and silver. You can hold it outside the banking system, either individually or in a third-party vault. You've got no counterparty risk. I mean, it's unique in that regard. Bitcoin's always been complementary in our minds. When we started getting involved back towards 2012, 2013, it was very much a new experiment, and there'd been a lot of failed experiments leading up to that of digital money. But it was the first to really take root. And although it's been a very volatile path, I think we see it as a complement to gold and silver. We've always viewed the two as having merit in different ways, in some ways very similar. But as we see in periods like this week during the volatility, I mean, Bitcoin still is not kind of the risk-free escape valve it may become over time. It certainly has that potential in the future, but right now I think it still correlates to risk markets, and gold generally hangs tight in times of trouble. I think over time that may change, but I see them as very complementary, as a basket of what could I own if the problem in the world is too much debt, printing money, and maybe ultimately a currency crisis. Like, where can I go? I think those two are key elements to that.
After the weakness in global equity markets last Thursday and Friday, the S&P was down about 10.5%. I noticed this morning that Bitcoin touched 74,000, down from a high a few months ago of about 110. So would you say that Bitcoin, is it fair to say that Bitcoin has developed a pretty close correlation to equity and risk markets, as opposed to being correlated to gold?
Yeah, I think it still leans in that direction. I think it still leans towards the flow of global liquidity, and there's still a lot of speculation in crypto. We know that. I think it's maturing, though. It's almost like we're talking about Bitcoin like it's money or a substitute, but we also have to acknowledge it's a technology, and it's going through a technology adoption curve. Mm-hmm. And most technologies, are not a straight line. There's right. A lot of ebbs and flows. But what I think could change the equation in this is when you look at the regulatory environment that's likely ahead of us in the U.S. and what the likely adoption will be throughout Wall Street and banks, et cetera. We're not there yet. That's mm-hmm. We're in this gray zone. And because of that, I feel like despite those promises, the market is saying, well, let's wait and see. But I think we're setting up for a framework where maybe this discussion a number of years from now, it might be viewed differently. It might be more of a safe haven asset. Right now, we still think there are, key elements of that, but it's still a technology. But as a technology, when you compare it to the adoption rate, it's moving at a quicker pace than internet adoption. So, I think you'd be foolish to think it's going to flame out or not continue to progress.
And not to be too intrusive, but do you have Bitcoin representation in all of your portfolios?
Yeah, I mean, we customize portfolios client by client, but I'd say generally the answer is yes. Even our
Mm-hmm.
more conservative clients have some allocation because, I think we're entering a world where there's certainly assets of the past like gold and silver that have merit, but increasingly I think it's trying to figure out where the world's going to move. And I think blockchain and Bitcoin and a number of other things are part of the future. And even if you're a conservative investor, you ought to have a piece of that, however
Gotcha.
small, in a portfolio.
Gotcha. And how about my favorite asset class, gold equities? Does Windrock maintain exposure to gold equities in additional to your physical silver and bullion?
Yeah, we do. We do. Generally, an allocation to precious metals for us is a mix of gold, silver, and actively managed mining companies.
Mm-hmm.
And the mining companies have been volatile, and we could ask the same question whether they move more with gold or more with the market. But I think, as you and I would both appreciate, with gold at these levels, the margins are now tremendous at some of these companies. So that has been a staple of our portfolios, although we'll at times get a little more active. In years past, when it ran way up, we took a lot of gains and had a smaller position, and more recently have added again. So that is definitely a piece of the equation.
And to really put you on the spot, there's certainly been a lag between the performance of gold shares and gold over, say, the last 3 to 6 months. And there's lots of reasons there, not least of which is I think sometimes when gold goes up rapidly for things like this physical movement back from London, that gold equity players just assume the gold price will weaken, at some point in the future. So why get involved in gold miners and then have them back off on you? So by question that's putting you on the spot, do you think gold stocks have lagged for those reasons, or do you think gold stocks are forecasting the fact that the gold price is likely to retreat?
I think it's probably more related to having the rug pulled out multiple times in the past. Gold in the past has run up, and it seemed like a great opportunity for miners, and then all of a sudden oil went way up, and their cost to get it out of the ground went so much further than people thought. So I think there's just it's kind of an area we like. We like things that have potential and the right tailwinds, but are kind of unloved and skeptically looked at. I think we're in one of those periods right now. But clearly, as we look today, price of oil's down. Some of the headwinds that could offset a higher gold price don't seem to be prevalent today. So I think the backdrop is fairly positive.
And with respect to the reputation that gold miners earned in the period following 2012, when gold had gone up 12 consecutive years, which nothing should ever do, and I'm not sure any other asset has ever gone up 12 consecutive years, but clearly that led to dissolution of discipline and management and capital allocation, et cetera. My question is, gold stocks have certainly suffered that reputation. Do you think there have been improvements in capital discipline and execution and management that make that characterization anachronistic, or do you think it still applies?
You might be closer to the details than we are in that regard. I mean, I do think with some of the shakeout the last 10 years, there is more discipline in the space, better management teams, more of an acknowledgement of costs relative to, revenue. But so I think it's better. I don't know if it's quite up to the standards of some industries, but I think it's on the right path. And that's part of the reason we use active management in the space. We try to rely on a couple firms that are into the details at the level that you're discussing.
And just to wind things up, and thank you for spending the time with us. What's your, every conversation has to have a tariff question. So what's your view of the fact that the Trump administration just took the blended tariff rate from 2.5% to 22%, which is the highest since 1910. The market's fallen 10.5%. You think tariffs are inflationary? Are we in trouble? What's your view of this tariff morass?
Yeah, well, it's a challenging question we're all trying to figure out. And I think I think, I mean, at our core, we're free market thinkers. We like free trade, et cetera. I think the promise of trying to use tariffs as a negotiating tactic to get down to no tariffs is a good aim. That's negotiating, and we'd rather see that. Or reciprocal tariffs. If you're going to charge 20%, fine, we'll charge 20% if you're not going to go to zero. I think most people are supportive of that kind of mindset to get to a fair, equitable trading relationship globally. I think the problem is people are trying to figure out what the strategy is. Is this just a negotiating strategy, and in 3 months we're all going to go, okay, we got free trade in all these countries, everything's good? Or, is it potentially a pin that kind of pricks the bubble we've had in money creation and asset values? And that's really the dilemma. So I think right now, I'd say we're probably more on the side of it's a negotiating tactic, but the longer it's outstanding, the more there's a risk for collateral damage and unforeseen things to break in the global economy. And I guess that's the risk right now. So on one hand, you want to feel like it's a time to take risk and that these things will be backed off in a couple months from now, everybody will be in good shape. But again, the plumbing of the global economy, everything's so over-levered, so interdependent that something could break along the way, even if that's the intention. So I'd say we have a very balanced view right now of just sitting back and not reacting too much and kind of seeing what unfolds.
And in these exciting and tumultuous times that we find ourselves, if viewers would like to get in touch with you to talk about a managed account or a little help in analyzing their own portfolios, how best can our viewers get in touch with you?
Yeah, I mean, I would say the best place is our website, windrockwealth.com. It's got all our contact information, but we also do a lot of interviews and articles, thought pieces on gold and silver and Bitcoin. So there's a research section that's probably a good place to start to see if we're in good alignment with what an investor is looking for.
Excellent. Brett, thanks for your time. We'll talk to you again shortly.
Okay.